Imagine putting $10,000 into just one investment and then sitting back while it sends you money every single month. No boss, no side hustle, just passive income rolling in. That's exactly what I did with schd, one of the most popular dividend ETFs in the United States. But the big question is, how much money does $10,000 actually pay in monthly dividends? Is it enough to cover your Netflix bill? Or maybe even your groceries? Stick with me, because in this video, I'm going to break down my real schd dividends, explain how the payouts work, and show you whether it's worth investing your own money. Welcome back to the channel. If you're new here, we talk all about investing, passive income, and smart money moves for people living in the US. Today's video is extra exciting because I'm sharing my personal investment in schd, the Schwab U.S. Dividend Equity ETF. I invested $10,000, and I'm going to walk you through exactly how much money I get in dividends every single month. Section 1. What is schd? First, let's quickly cover what schd actually is. schd stands for Schwab U.S. Dividend Equity ETF. It's one of the most popular dividend ETFs in America, with billions of dollars under management. The fund invests in high-quality U.S. companies that have a strong history of paying dividends. Think names like PepsiCo, Coca-Cola, Home Depot, Merck, and Broadcom. These are not speculative penny stocks. They're blue-chip companies with reliable earnings. What makes schd really attractive is its combination of a solid dividend yield, usually around 3 to 3.5%. Dividend growth. Historically, it increases payouts almost every year. Low fees. schd charges only 0.06%, which is basically nothing compared to mutual funds. So it's popular with US investors who want steady passive income without paying crazy management fees. Section 2. My investment. $10,000 in schd. Now let's talk about my own numbers. I invested $10,000 into schd. At the time of my purchase, schd was trading around $75 per share. That gave me roughly 133 shares. schd currently pays a dividend yield of around 3.5%. That means, on average, I can expect about $350 per year in dividends. But here's the fun part. schd doesn't just pay once a year, it pays quarterly. That's 4 times a year, straight into my brokerage account. If you break that down, $350 per year equals about $87.50 every quarter. Divide it even further, and it works out to around $29 per month in dividend income. Section 3. The reality of monthly income. Now, here's where a lot of people get confused. Even though I just said schd pays quarterly, many dividend investors like to think of their payouts on a monthly basis. So yes, technically, I'm not receiving $29 every single month. Instead, I get $87.50 every 3 months. But if you average it out, it's like having a $29 paycheck each month, just for owning shares. Now, $29 might not sound like life-changing money. It's not going to cover your rent in New York City. But let's think bigger. If you invested $100,000 into schd, you'd be earning around $290 per month. At $500,000 invested, you're looking at $1,450 per month, enough to cover rent in many US cities. And at a full $1 million invested, schd could be paying you about $2,900 per month in passive income, basically a comfortable retirement. Section 4. Why I like schd. So why did I personally choose schd instead of other dividend ETFs? A few reasons. Number 1. Dividend growth history. schd has a great track record of raising its dividend. In fact, over the past 10 years, the dividend has grown significantly, giving investors a nice raise over time. Number 2. Strong companies. schd doesn't just chase the highest yields. It looks for financially solid companies with strong fundamentals. That means my dividends are less likely to get cut in a market downer. Number 3. Low fees. Like I said earlier, the expense ratio is just 0.06%. If you compare that to many actively managed funds charging 1% or more, you realize how much money you're saving over decades. Number 4. U.S. tax advantages. Since schd holds U.S. companies, the dividends are considered qualified dividends for U.S. investors, which often get lower tax rates compared to regular income. For me, that combination makes schd a very attractive set-it-and-forget-it investment. Section 5. Risks and downsides. Of course, no investment is perfect. Let's talk about the risks. Dividends are not guaranteed. Companies can cut or suspend dividends in tough times. While SCHD picks strong companies, it's not bulletproof. Stock prices can drop. If the market falls, SCHD's share price will fall too. Your dividends might keep coming, but your portfolio value could shrink in the short term. Yield isn't huge. At 3.5%, SCHD won't make you rich overnight. You need a larger amount invested to see serious passive income. Quarterly payments. Some people prefer monthly dividends for cash flow. SCHD doesn't do that, although you can combine it with other ETFs to smooth out income. Section 6. Is SCHD worth it? So, is SCHD worth investing in? In my opinion, yes, if your goal is long-term passive income and stability. It's not going to double your money in a year like a risky stock, but it provides consistent income, strong companies, and dividend growth that beats inflation over time. For me, $10,000 in SCHD is a starting point. I see it as a long-term position I'll keep adding to over the years. The way I look at it, every dollar I put into SCHD is like buying myself a little piece of future freedom. A paycheck that arrives without me lifting a finger. So let's wrap this up. I invested $10,000 into SCHD, and right now it pays me about $29 per month on average in dividends. That's not a fortune, but it's proof that dividend investing works. The more you invest, the more those dividends grow. And when you add in reinvesting dividends plus dividend growth, the compounding effect becomes massive over 10, 20, or 30 years. So if you're looking for a reliable, low-cost, and growth-friendly dividend ETF in the US, SCHD is definitely one to consider. Now I want to hear from you. Would you invest $10,000 in SCHD? Or do you prefer other dividend ETFs like VYM or DVY? Let me know in the comments below. If you found this breakdown helpful, make sure to hit that like button, subscribe for more US-based investing content, and share this with a friend who's curious about dividend investing. Thanks for watching, and I'll see you in the next one.